Analysts expected the US dollar to weaken following the results of the Fed's meeting. However, things turned out to be different. The US dollar index jumped up and reached the level of 93.50. However, the greenback is unlikely to develop the rally. Economists are confident that the current upward trend is short-lived, especially given the latest statistics. Yesterday, the report showed the slowdown in consumer spending that accounts for more than two-thirds of US GDP, so it means that the US economy is still contracting. So what exactly stirred up market participants yesterday? The fact is that the FOMC members have had a disagreement in determining the future course of monetary policy. Some policymakers do not support the strategy of keeping low interest rates at the current level. They doubt that it will ensure the employment revival and strong and stable inflation running above 2%. Robert Kaplan, president of the Federal Reserve Bank of Dallas, called for a more flexible approach to monetary policy. As we can see on the chart, the US dollar regained its footing amid Mr. Kaplan's statements. Yet the words of only one FOMC member is highly unlikely to change the trend. The US dollar is still weaker than the yen. This is mostly due to the fact that the US stock market is trading in the red, which is bullish for the yen. Besides, investors welcomed the news on the election of Yoshihide Suga as Japan's new prime minister, so the pair is steadily going down, aiming at the level of 103.75 as we forecast. At the same time, the trajectory of the AUD USD pair is rather unpredictable. Judging by the movements of the quote, investors are hesitating before opening new deals. Currently, the pair is trading near the level of 0.73. Technical analysis experts are waiting for a drop below the 0.7249 level. If so, the pair may well decline to the 0.7110 level. However, the fundamental analysis signals another trend as the pair is gaining ground amid today's reports from Australia's labour market. The jobless rate in Australia unexpectedly fell from 7.5% to 6.8%. The economy added 111,000 jobs, blowing away expectations that called for a loss of 40,000 jobs. This news boosted market sentiment as such a surge in the employment rate indicates a recovery in the economy. The Reserve Bank of Australia may also review its monetary policy amid a spike in the labour market. That's all for now. We wish you profitable deals. See you on our channel with a new video in a couple of hours.